Welcome to our detailed summary of the 10 key equity lessons from the 2025 Chinese stock market, based directly on the latest Goldman Sachs Global Investment Research report titled China Strategy: 10 Key Lessons Learned from 2023 to 2025. First lesson: China's A shares and H shares have delivered 2 consecutive years of positive returns, posting strong gains of 16% and 29% respectively in 2025, which exceed historical averages as noted in the MSCI China performance breakdown and suggest a slow but steady bull market is forming in the equity landscape. Second, better than expected trade outcomes have outweighed fiscal policy misses. For example, Chinese exports grew 5.4% year-on-year despite rising US tariffs, now at an effective rate of 29%, with AFD at 11% of GDP, which has helped strengthen the RMB against global currencies. Third, AI has fundamentally changed the game for Chinese tech equities, as the breakthrough launch of DeepSeek R1 sparked a powerful rally in data, cloud, and semiconductor sectors, collectively adding over $2 trillion in market capitalization according to the relative performance charts. Fourth, China's journey to further integrate with the world economy continues steadily despite trade headwinds, as its export story successfully evolves from low-cost manufacturing dominance to high-end goods and services increasingly targeted at fast-growing emerging markets around the globe. Fifth, Chinese consumers are still actively spending, but they are directing their money into different pockets of the economy, notably shifting preferences towards services, entertainment, and experiential purchases rather than traditional consumer goods, as seen in recent spending pattern shifts. Sixth, all eyes remain firmly on inflation trends, where anti-involution policies targeting high-intensity sectors like solar equipment, batteries, semiconductors, and cement are reigniting hopes for reflationary pressures and a more balanced path to sustainable economic growth. Seventh, the 15th Five-Year Plan is set to redefine investor strategies for Chinese equities, placing sharp focus on strategic sectors such as technology self-reliance, semiconductors, electric vehicles, and other long-term growth objectives outlined in national policy roadmaps. Eighth, China is increasingly investable on the global stage, with domestic capital flows actively reallocating across markets and foreign investors displaying renewed enthusiasm and commitment towards participating in Chinese stocks amid improving fundamentals. Ninth, China's diversification value is on full display through conceptual efficient frontier analysis, offering unique opportunities for both international and domestic investors to enhance portfolio resilience by incorporating onshore and offshore equities projected on the optimal risk-return curve for the next decade. Finally, while many risks such as property sector woes, geopolitical tensions, and inflation pressures still linger, targeted policy interventions including stimulus and regulatory puts have effectively flattened the left-tail risks, mitigating extreme downside scenarios in market volatility distributions. These 10 lessons from the Goldman Sachs report provide a comprehensive overview of the Chinese equity market's key dynamics, persistent challenges, and promising opportunities for discerning investors throughout 2025 and into the future.